when I think about India 2021, I kind of, particularly in the debt side, I have think about public debt and private debt. Issuers that are able to get themselves rated and are able to tap the dollar public market actually have a plenty of supply, liquidity available, and at a very tight pricing. So I think a lot of issuers will try to take advantage of the liquidity and come out with a dollar issuance, their maiden issuance, and so on. In the private credit space, a number of opportunities around, for example, real estate and dividend recap. Those are very trending themes, which we think that would play out exceedingly well. Particularly, there are a lot of good borrowers out there who haven't had been affected by COVID and have equity investors wanting to get out, so they want to do a small dividend recap, or they have some over leverage at the holdco. So we see these kind of playing out in a big way, as far as 2021 goes. In terms of, again, sectors, as I said, like real estate is a very strong theme. A number of NBFCs were supporting it. Now their support has come down, although it's kind of plateaued out, and I think the NBFCs are coming back soon. I think this is going to be another area of very of opportunity for 2021.
I've always found acting for borrowers more fun, more interesting. You get to know a company, you get to know a company's business, how they operate, how they manage. When you're looking at documentation for the borrower, you can't just blindly copy and paste clauses without understanding what they mean. You need to understand each clause and how it impacts the borrower, and advise the borrower how these clauses could affect their business. Also, some of the borrowers may not have sophisticated legal departments, or may not even have legal departments. So you have to break down in layman terms some of the concepts or some of the covenants to them. Being a trusted legal advisor or trusted borrower counsel also requires you to understand and get involved with some of the commercial decisions of the company, and to ensure that the documentation does not impede the borrower's business once it's signed. Acting for borrowers is very much in line with our strategy in Asia. Mishcon Durea opened on 1st of May 2020, focusing on private wealth, arbitration, transactional work, which includes restructuring. They act for high net worths and their businesses. As we like to say at Mishcon, it's business, but it's also personal.
Seeing a trend where companies are moving towards more of a debtor-led scheme of arrangement process that involves where the company is in charge as opposed to a creditor-driven process where a different person, an insolvency practitioner, is in charge. That involves the company hiring advisors, working with that advisor to find alternative capital, whether that's strategic investors or private equity investors, and then putting together a plan and then getting the consensus from creditors. The moratorium has been a really big game changer in that instance. It's allowed the companies the breathing space to be able to put together a plan. And there's also been some other features like super priority rescue financing, cram downs, and other features that have supported the debtor or helps the debtor in putting together that plan. We're also seeing increasing use of CROs, Chief Restructuring Officers, as well as directors to the board to help the management teams and help support the companies through this process as another layer of support for management. Thank you.
The one issue with Asian markets in general is the level of transparency, especially compared to the Western world. So I think one of the impediments is the general opaqueness of disclosure standards, etc. And I think that in the current world where logistics is a problem in terms of travel due to COVID, etc., that becomes a bigger problem. But I think that is one of the major issues. The other is Asian markets have a lot of different jurisdictions, so there's no one cookie cutter approach to structuring transactions, which is more popular in the West. So I think those are the two main sort of impediments to scalability in the private credit market.